Hello trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the recent huge move in the crypto space, in particular Bitcoin, as it's nearing 60,000. Have to change this headline every handful of hours, it seems, as Bitcoin has been able to climb from the low 50s to the mid 50s to now nearly the high 50s. What does it mean for US dollar, US interest rates, US stocks, everything? We're going to explore that here today with specifically the story around this US dollar. Is it at risk given this cryptocurrency's rise? Is a more traditional currency like the US dollar vulnerable every step of the way higher for Bitcoin, and vice versa? If Bitcoin were to fall, does US dollar get a rise out of that? But let's take a look at the recent rise in Bitcoin, because it is an extraordinary one. Not a lot of people expecting Bitcoin to have the end to 2023 that it did, climbing up above $40,000 then. And then this year, looking like it might have pulled back a little bit, but regaining those recent highs and now trading, like I say, near 60,000, up around 30% year to date. Of course, no clue where this market is going next. But a lot of people eyeing those historic highs, all-time highs in Bitcoin in the mid 60s, or will it pull back to 50 or 40K? It seems like anything on the table given this recent surge in volatility that we've seen to the upside so far, but could turn at any moment. So what's been going on in some other asset classes amid this upside in the major cryptocurrency? Well, traditional currency, US dollar, has actually held pretty strong for now. We'll see how these pieces evolve. But looking at dollar yen here, holding above 150, you'll remember those are pretty historically high levels for the US dollar. And of course, the euro and the pound, certain major currencies have fought back a little bit in recent trade against the dollar, but nothing super substantial. Dollar's still positive against most major currencies on the year, even with a nearly 30% up move in the Bitcoin market. And let's lay some historical data on top of each other to show the historical relationship between the two. And I also want to highlight maybe why we've seen historically an inverse relationship between these two markets, and currently not seeing so much of an inverse in the last month or so of trading. Now, here you have US dollar and Bitcoin. And if you look back at 2022 and 2023, look very directly inverse, right? Dollar is moving on to its highs against some markets like the yen and like the euro, multi-decade highs for US dollar. And at the same time, Bitcoin was moving to yearly lows, moving not only to lows, but going from above 60K in 2021 to down to, at certain points, under 20,000. So a huge loss for Bitcoin in the same period that dollar is getting to multi-decade highs against a number of major pairs. And now you look to the rightmost part of this chart and you see a different story. Bitcoin ascending back to those highs, but dollar, a couple of things. Dollar holding on to a lot of the gains that it's made since 2021. But two, if you're looking actually particularly at the last handful of weeks, both markets appreciating a little bit in the same time period. So it begs the question, does Bitcoin strength necessitate US dollar weakness, and vice versa? If Bitcoin falls now, is that necessitate a huge rally in USD like we saw in 2022? And the correlations saying maybe not so much. No necessity here, at least given historical price action. We've highlighted the row showing Bitcoin's correlation to the S&P to gold, and then also euro dollar, pound dollar, and dollar yen. And across the board, you're seeing near zero values, telling you no correlation. Remember that correlation is a measure of -1 to +1. And if it's far towards -1, meaning an inverse correlation, if it's a +1, as you see slicing down the middle of this chart, there's a +1 correlation between the S&P and the S&P, or gold and gold. And you're not seeing any big values in either direction for any major asset class against Bitcoin right now. And the missing thread in here that connects all of these assets is interest rates. And you'll keep in mind that interest rates moving higher most aggressively in the U.S. in 2021 and 22, and also in parts of 23, that move really brought U.S. dollar higher because the U.S. hiked further and faster than most major economies like Japan, UK, Euro area, Canada, Australia. And so that brought that U.S. dollar higher, and higher interest rates really can constrict money flow and really constricted volume for cryptocurrency, and also appetite, demand for cryptocurrency, as opposed to getting your U.S. dollars into U.S. treasuries at 4 or 5% yields at the time. And so what you're seeing is 10-year yields here and U.S. interest rates across the board really kind of holding in that 4 to 5% range, and Bitcoin's rally kind of happening on its own. I think a lot of people were thinking, oh, interest rates have to fall down close to zero for Bitcoin to rally. And when that happens, U.S. dollar will collapse back down to its pre-2021 levels as well. And we're not seeing that. Now, of course, U.S. yields and U.S. dollar can move lower. They can move higher. And that can have some kind of adverse effect on Bitcoin. But what we're seeing so far, you just saw the correlation numbers, and you're seeing it here with Treasury yields holding in pretty well in 2024 as Bitcoin is moving close to 60K. The Bitcoin move is a Bitcoin move. The crypto move as an asset class has been on its own, not really tied to the stock market, the gold market, the interest rate market, or the traditional currency market. Now that can change on a dime, but that's what we've seen so far. So at the moment, U.S. dollar could, of course, be vulnerable if U.S. interest rates or politics, any kind of instability enters the story here. But for the time being, Bitcoin's rally not having so much of an effect on U.S. dollar.